So as the UK prepares itself for a potentially painful budget on Wednesday, there's strong rumours that taxes will be going up, including capital gains tax. So in this video, we're going to be going through the best tax-free methods to save and invest your hard-earned money, including ways that you can be exposed to the cryptocurrency markets. So let's get into it. So starting off then with a very quick disclaimer that of course neither myself nor Learning Crypto are tax advisors or accountants. So nothing in this video should be constituted as financial advice. But with that out of the way, let's quickly go over what capital gains tax is and when you'd be expected to pay it. So all this information is from the HMRC website, so feel free to go and check it out for yourself. But as you can see in this quick little example, capital gains tax is the profit of when you sell or dispose of an asset that has increased in value. So for example, if you buy something that is worth £5,000, sell it later for £25,000, then you would have made a gain of £20,000, and that will be subject to capital gains tax. Now, as it says here, some assets are tax-free, which we'll go over a little bit later in the video, and you do also have your tax-free allowance. So at the moment, that tax-free allowance is £3,000 per tax year. So you can make up to £3,000 in capital gains without having to declare or pay any tax on it. Now, this used to be a lot higher. 2 years ago, it was £12,000 per tax year. Then it got cut to £6,000 per tax year last year, and it's currently £3,000 per tax year at the moment. Now, this is something that is under threat in the upcoming budget on Wednesday. Now, this could be completely scrapped, and it could be as immediate as the day of the budget. So more than likely and hopefully it won't be coming into effect until the next tax year starts, which is next April 2025. However, it could be as of the day of the budget. So something to keep an eye out for and something to keep in mind. Now, if you want more details on capital gains tax, i.e. how much you're going to pay depending on your income and circumstances, how it impacts crypto, and also what changes are being rumoured to being brought in the budget, then go check out the video I made last week, which I will link at the end of this video. Another thing to keep in mind is your tax on your savings interest. So if you've got money in a bank account or like a high interest savings account, then it will be subject to tax once you go over a certain amount of interest. So if you're in the basic rate of pay, which is currently up to £50,270, then you can earn up to £1,000 of interest without paying any tax. If you're in the higher rate of tax, which is up to between £50,271 and £125,140, then you're allowed to earn £500 tax-free in interest before being taxed. And if you're at the additional rate of tax, which is over £125,140, then you'll be taxed on all interest that you make out of your bank accounts or savings accounts. So the first and probably the most commonly known way of protecting your savings from tax is a ISA, so an individual savings allowance, which you're currently allowed to invest up to £20,000 in per tax year. Again, hopefully that won't change in the budget, but there are basically 4 different types of ISAs or individual savings allowances. So there's your cash ISA, there's your stocks and shares ISA, there's a help to buy / lifetime ISA, and also junior ISAs, which is obviously for children. So the lifetime ISA and help to buy ISA are, as you might expect, are for buying your first property as a first time buyer. With the lifetime ISA, you've also got the option of using it as a pension as well. But if you want to withdraw the money that you've put in for anything that's outside of those 2 reasons, you are going to face some penalties. So be very careful about how much you want to invest in that. Now, with the lifetime ISA, the government gives you basically a 25% return or bonus on top of what you invest, up to £4,000. So you can invest £4,000 per year into a lifetime ISA, and the government will give you 25% on top. So if you invest £4,000, the government will give you an extra £1,000. So after the first year, you'll have £5,000. But as I say, that money is locked away until you either buy a first property or until you retire. So the other 2 most common ones are the cash ISA and the stocks and shares ISA. We'll start with the cash ISA, and as you can see, these are the current best fixed rates for cash ISA. So you've got 1 year, 2 year and 3 year fixed rate cash ISAs, and as you might expect, depending on who you choose, you put your money into that account depending on what their minimum maximum deposits are, and you are guaranteed that interest rate and that return at the end of the year. Now, most cash ISAs, you put that money in for a certain amount of time and you'll get the interest paid at the end of it. So again, you've got to be careful about where you want to put your money for that length of time. Now, some places will allow you to withdraw without any penalty. You just won't get the interest after it. Some places will charge you for withdrawing your money early. Some places will give you your interest gradually, so you can earn interest over a couple of months and then withdraw it. So just be careful and read the small print. If we move on then to the junior ISAs, so these you're allowed to invest up to £9,000 per tax year, unlike the cash ISAs, which are allowed to invest up to £20,000 per tax year. But going back to what we said about the lifetime ISA, so say you're going to invest £4,000 in a lifetime ISA, and then you want to also invest in a cash ISA, you're allowed to invest into each one of the different ISAs, however, a total of £20,000 investment. So you can put £4,000 in your lifetime ISA, for example, then that leaves you £16,000 to invest in a stocks and shares and or a cash ISA as well. Then obviously your junior ISA is for children, so investing for kids, like your own kids or grandkids, niece, nephews, all that sort of stuff. So again, junior ISA, very similar to a cash ISA, just for children, £9,000 per tax year, as you can see down there. And again, works the same as before. You'll get a percentage of interest at the end of that year. And of course, the whole point of an ISA is that it is protected from tax. So any interest you make on your LISA, stocks and shares ISA, cash ISA, or junior ISA are all completely tax-free, even once you withdraw the money as well. So it's not like it's tax-free until you withdraw it. Any money that is made within an ISA is completely tax-free. One final thing to note about ISAs as well is that you can transfer your ISA from one provider to another, and that does not count as a contribution in that tax year. So if we go back to the previous cash rate ISA, so say you've got your money in one cash ISA, say Virgin Money, and you wanted to move it to another provider that's got a higher interest rate, you can move it between or during a tax year, and that movement of money or that transfer does not count as your contributions for that year. So say you've got £60,000 in a cash ISA and you want to move it from one ISA to another in that tax year, you can do that, and you've still got your £20,000 allowance to invest in other cash ISAs, stocks and shares ISAs, LISAs, etc. So another popular and easy tax-free method of saving is premium bonds. So premium bonds work a bit like a lottery. They're provided by the NSI and backed by the HM Treasury. So they are very safe, but there are some pros and cons. So unlike with the cash ISA, where you've got a guaranteed interest rate return, with premium bonds, as I say, it is a bit of a lottery. So it all depends on your luck, essentially. So you should be getting an average of around 4.4% or 4.15% from December of this year back on the money you invest. But of course, it is down to what prizes you win. So you're allowed to invest a minimum of £25 because each bond costs £25, and up to a maximum of £50,000. And then each month there is a draw, and then depending obviously on what numbers come up depends on whether you win any money. So any prizes you win are tax-free, of course. And if we go to the winners of last month, so the top prize is £1 million, then it's 100,000, and then I think it goes down to 50,000 and 20. Oh, there's lots of prizes here. 50,000, then it's like £25,000, all the way down to £25, I think, is the lowest prize. So if we take a look at some of the big winners here, the crazy thing is that you don't have to have a lot invested to potentially win a lot of money. Of course, as I say, it is complete luck, and the more money you have in, the more likely you're going to get that return. But if you see here, this is how much they had in, this is how much they now currently hold, and this is how much they won. You can see some very, very lucky person literally had £25 invested and they won £100,000, which now means obviously they've got the maximum of £50,000 in holdings, and they've taken the other £50,000 out. Now, if you win a prize, if you haven't reached your maximum holding of £50,000, you can either choose to reinvest your earnings, or you can get it paid out to you. But obviously, once you hit that £50,000 limit, then any price you make are going to get paid back to you, and they are still tax-free. So not trying to light the gambling flame inside you, but as you can see, well worth having something in there, because you never know. As I say, this person had £25 invested and they won 100,000. Even this person here, £500 invested won £100,000. Even this person that won the top prize of £1 million, they only had half of the maximum amount invested at £25,000. So well worth looking into and put in some money, especially if you're a little bit risk adverse. So you don't necessarily want to go into stocks and shares, but you would like the opportunity to potentially make a little bit more than what the cash ISAs are offering. Now, these are also available for children as well. So I think for children, you're allowed to have same limit, £50,000, and you can actually buy them as gifts as well. So again, not a bad little way of stashing some money away and potentially winning a big sum of money, which is of course tax-free. There's also no limit on how long you have to have your money in there. You can deposit it 1 month and withdraw it the next. The only thing is that if you want to be part of the prize draw, you have to have entered your money before the start of the month. So as you can see, the next draw is currently on the 2nd of November. So if you want to be part of the draw for December, you need to get your money in before the results of the November draw. So before the 2nd of November, if you want to be part of December's draw. But as I say, you can withdraw your money at any time. You can either withdraw it totally or partly, and you can have your winnings either paid into your account or reinvested back into more bonds until you reach that £50,000 limit. Moving on then to the part of the video that the crypto enthusiasts will have been waiting for. How do you get exposure to the cryptocurrency market whilst gaining tax-free profits? So we're going to be talking about the stocks and shares ISA. But if you're enjoying the video, please do like and subscribe to the channel. It helps us grow and we really do appreciate it. Now, this provider is Trading 212. There's lots of different stocks and shares ISA providers out there, but I think, in my personal opinion, Trading 212 is the best, not only for a stocks and shares ISA, but also for a cash ISA as well. Now, if we just quickly go over the cash ISA, because we've been through cash ISAs previously, but what sets this apart to other cash ISAs, as I said before previously, the other cash ISAs pay you the interest at the end of the year, most of them, whereas this cash ISA from Trading 212 pays you your interest daily. So it's also a higher rate than what those other providers were before. They were averaging around 4.5%. This ISA is 5.1% per year, and as I say, you get your interest paid daily, so you get that compounding effect, and of course it's all tax-free. Also, you have the stocks and shares ISA, which is, I personally think, a better option because you have the best of both worlds. Now, in your stocks and shares ISA, if you put money in stocks and shares ISA from Trading 212 as opposed to the cash ISA, you still get all the benefits of the cash ISA. So any money that's not invested in stocks and shares in your stocks and shares ISA still benefits from getting that 5.1% AER on your cash every day. But you then also have the option to invest that cash into stocks and shares and make tax-free gains. Now, I use this myself. It's a very easy to use and interface, very user-friendly, and of course everything is tax-free, not only your dividends but your interest and any gains you make on your investments as well. So the ways that you can get exposure to the cryptocurrency market through Trading 212, one of the best ways is this Wisdom blockchain ETF. So as you can see, available on Trading 212. If we take a look at the Wisdom Tree website and show you what it contains, so this is the breakdown of the holdings in the ETF. So 10% of it is MicroStrategy, a company which actually invests in Bitcoin itself. Then you've got Robinhood, Coinbase, of course, one of the biggest exchanges of cryptocurrency in the world. Then you've got some of the Bitcoin miners, as well as some other places like PayPal and Applied Digital Corp, etc., all broken down into certain percentages. So rather than going out doing your own research and investing in the slightly riskier individual assets, you can invest into this ETF, and your money is split across these investments. So if you wanted a little bit more risk, you could go and invest into the individual assets themselves, or the individual companies themselves. So this is a list of the top Bitcoin miners by market capitalization. Now, you can get access to the majority, if not all of these, on the Trading 212 app. If I were you, I would probably stick to the top 10 or 15. Don't diversify too much, but also you don't want to go all in on one, because these are very volatile assets. Anything to do with cryptocurrency is, of course, very volatile. Now, the reason you would invest into Bitcoin mining stocks is, of course, they are beta assets to the asset itself. So similar to why people would invest into precious metal mining companies, is that when the underlying asset does well, so in this case Bitcoin does well, then the miners are going to do very well. But also, if Bitcoin does poorly, then the miners are also going to do a lot worse. So be very careful with them. They're volatile assets, but the way these companies make their profits is, of course, by mining the Bitcoin and then selling it, and also the fees they get for mining the Bitcoin too. So as I say, when the fees are high and Bitcoin is doing very well and expensive and worth a lot of money, then the miners' profits are going to do very well, and that is going to reflect in their share price. So as I say, invest in these when you think Bitcoin is going to do well, and avoid them when you think Bitcoin is going to do badly. And as I say, if you invest in these within your stocks and shares ISA, any gains you make on them are tax-free. So if you're expecting a strong bull market in the next 6 months, which hopefully we're going to see, then these Bitcoin mining companies could be a very good play. And as I say, they're going to be exempt from any capital gains tax. So you could make a nice chunk of money going into the next tax year. Finally, probably the oldest method of tax-free saving and investing is precious metals, i.e. gold and silver. Now, we're on the Royal Mint website, and if you go on to invest and then capital gains tax, you get this page here, which goes over some of the stuff we've already been through, which is what capital gains tax is and when you're expected to pay it. But just make sure that if you do want your gold and silver to be exempt from capital gains tax, it has to be a certain type. So capital gains tax is chargeable on all gold, silver and platinum coins that are not produced by the Royal Mint, as they are not considered to be UK legal tender. Also, all gold and silver bullion bars are also subject to capital gains tax. So if you want your gold and silver investments to be exempt from capital gains tax, they need to be produced by the Royal Mint, and they need to be gold, silver and platinum bullion coins as well. So the reason for that being, as it says there, is that they are considered UK legal tender, and therefore they don't incur capital gains tax. Now, it doesn't mean you have to only buy it from the Royal Mint website. There are other providers such as Atkinson's, which get their coins from the Royal Mint. So as you can see here, this is the Atkinson's website, and you can go on CGT free gold and silver coins. All coins produced by the Royal Mint that qualify as British legal currency are exempt from capital gains tax. This includes all Britannia coins, all post 1837 gold sovereigns, and then they have free insured UK delivery as well. So go on there, check them out. One thing to keep in mind though, the difference between gold and silver is that if you do buy silver, they do have VAT added to the price, whereas gold does not. So if you click on a silver coin, you can see that it includes VAT, whereas if you go on a gold coin and you click on any one of these, you can see that there is no VAT added on those. So gold is usually the better option to silver, but then there are more multiples on silver, but it is more volatile. Whereas gold, as we know, it's one of the oldest hedges against inflation. So in times of high inflation, like we're experiencing at the moment, gold usually does pretty well. As you can see currently, it's at new all-time highs, or it certainly was last week. And who knows, there may be a bit of a bump in the price going into the budget as well, as investors start looking at ways of saving and investing in tax-free methods. And then finally, as we touched on previously with the stocks and shares ISA, you can also invest in gold and silver precious metal mining companies as well, similar to how you can with Bitcoin mining companies as well. So I hope you enjoyed the video. I hope you found it useful. Let's hope that the budget isn't as painful as we're all expecting. But even if it is, at least now you're armed with some ways of keeping your money safe from taxes. So hope you enjoyed the video. Drop a like and subscribe, and I'll see you on the next one.